Hello YouTube, today we're going to be talking about my favorite chart pattern, rising and falling wedges. So rising and falling wedges appear pretty much everywhere in standard markets and crypto markets. A lot of the time when we draw a falling wedge, it plays out, and a lot of the times when we draw a rising wedge, it plays out. I like to look at my overall time frame first, such as like the 1 hour, to kind of see what the ribbon's doing on Market Cipher A. And, you know, if we're in an overall downtrend, like here, I'm only really going to be looking for rising wedges into short. But when we get across up, like this, to the upside, I'm really only looking for falling wedges to trade upwards with on a 5-minute time frame, because I prefer to scalp. Rising and falling wedges have a very high success rate, and they're very easy to find and draw. So this entire time here, like I said, I'm going to be looking for falling wedges, since like, did I leave those on there? I think I did. Since like up about here, I've been looking for just rising wedges to short. So right here's one. You're just going to want to connect your lows. And then for this one here, you're going to want to connect your highs. So there's a rising wedge right there. And for a rising wedge, most of the time our profit target is at the bottom of the wedge. So right here we would have taken our profits. Here we have another one. Sometimes they're not always perfect. Like this, we have a little hiccup there and a little hiccup there, but that's completely normal. So just as like the last one, we'd want to take our profit at the bottom of our desired wedge. So right here. So as you can see, they're pretty well everywhere. Now, from like right over here on our 1 hour, it was looking, we got our cross. So now we are just looking for falling wedges. So this is something else I wanted to talk about. Most people, when they trade wedges or triangle patterns of any sort, they look for a breakout. So right here, a lot of people went short, which is completely wrong. That is not how you trade wedges. See, for me right here, I'd be looking to take a long. Number one, because we're way oversold. We are over 75% through our triangle or our wedge pattern. And the overall market is bullish. So why would I short in an overall bullish market? That makes no sense. So I would have took a long here, and I would have taken profit right here. Simple as that. It's really that simple. And I mean, these trades have a very good risk to reward ratio and a very high success rate. Like, look at this. Maybe got in there. That's a 1 to 3. Sometimes when I get into these trades, I like to add to them a lot too, because if you add to these, let me find a good example of that. Okay, this is a pretty big one. This isn't a wedge, but it is a triangle. Say right here, when we had this bearish divergence, I'm going to be making a video on bearish divergence in the next few days, so you guys know and understand what is a bearish divergence. So we had this bearish divergence right here at the top of this triangle in an overall bearish market. So we'd take a short right from this level. Stop loss right about there on that wick. And we're going to target the bottom of this triangle. Right about there. So what I do to lower my risk and raise my reward on a trade like this is I would just look for smaller triangle patterns. So we had one right here. Now I'd look for 75% of the triangle, just like normal, just like I was taking a new trade. I would look for a bearish divergence. This would be a hidden bearish divergence. Prices coming down, oscillators going up. So right here, I would add to my already winning position. I only add if my position is winning. I would lower my stop loss to the last swing high, so right about there. And now I would bring my entry, because I'd only add about, say, 25% of my existing position already, so I'd bring my average entry down to about here, and my stop loss is right here. So all of this right here is now locked in profit. So now, instead of risking on this trade, I'm risking nothing to gain a lot. I don't know how I can explain that any better. I'm risking nothing to gain a lot more. So I would do the same thing right here. There's another triangle pattern right here. Nice and easy, right? Keep things simple, guys. I'd bring my stop loss down here. I would add about, 10-15% more onto my current position. That'd bring my average entry down to about here. And now we've locked in all of this profit. And now, look at that. We broke back down from this triangle. We locked in 1.45%. You know that 25x leverage? Let's do the math right here. Calculator. 1.45 times 25x leverage. 36%. How long did that take? 12 hours. 36% in 12 hours. I really do like the strategy of these wedges and triangle patterns, and just adding to your winning positions and looking at your overall view of the market. If the market's overall bearish or bullish, that's basically what you're going to be wanting to trade. it's super easy, and I used to really overcomplicate things, and I'd just be looking at this. This is all I'd be looking at. It's just an indicator. Buy, sell here, buy, sell here. Wrong. You want to use price action as well as using your indicator. Now, Market Cipher is a great tool if it's used correctly. Anyways, I think that pretty much wraps up today's video. I just wanted to talk about how I use rising and falling wedges and how you draw them and how important it is to know these basic chart patterns because they're very powerful. Chart patterns in themselves are one of the most powerful things you can use in trading. And if you combine it with a tool like Market Cipher, oh boy, you're just looking at profits all day long. And I really do mean that, guys. Anyways, I'm going to be making a new video in the next few days about what is a bearish divergence and a bullish divergence, and keep your eyes peeled for that video because it's a very important video to know if you do not know what bearish and bullish divergence is. But yeah, take it easy.